Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn & Associates with your metals market update, and this update is for Tuesday, the 9th of October, 2018, and we're now at about 3:40 p.m. Central Daylight Time. So in the metal markets, I've sent out the silver report. It's going out right now. For those of you, and this is 3:40 p.m., it's probably at your mailbox in the past 10 minutes if you're on my mailing list. If not, go to our website and make sure that you sign up for one, and our staff will send it out to you to get onto it. All right, in the metal markets, we're getting this coiling going on. I was watching today numerous of the financial TV shows, and gold has become a popular subject. And they're talking, is gold going to break out to the downside and challenge that 1160 area, or is the market going to be able to get up here over, say, the 1220 area and make a run maybe to the 1250s? Everybody has a different idea as to what's going on, but the pros that I like, they see what I'm seeing. It's not that we even know each other, some of them. They see the coiling going on, and that's the important part. Is there a change? If you'll recall, gold was missing out, couldn't find inflation stories, North Korean stories. It couldn't find low interest rates to rally on. Has it changed with the fact that interest rates have moved up to the point where emerging markets are getting into trouble? Maybe the market's sniffing a bit of inflation. China having some problems. If you're watching what's going on, take a look at what happened to the Hong Kong lending rates overnight. 4% jump. That's not a little bit. That's big. And the idea there is it costs more to borrow money if you're going to be moving into or out of the yen or shorting it. Different ideas. Here's the weekly chart, and you see on the weekly basis the sideways action. And yes, the market is down now, and it's down early in the week. It's only Tuesday. We're down $12 for the week. The chart pattern, well, you can argue that it's working its way lower right there. Maybe I'll draw some chart lines for you next time. But you have a pattern of lower highs. What do we have? Lower highs and higher lows. You see that? Now, if you take out 1186, that negates the higher lows and puts the market, I think, into a problem area. Look where the resistance is. Back at the 1200 level, the 18-day average of closes, the support, the lower Bollinger Band. So once again, this market has hurt the person that was hoping to break out to the upside, to the downside, went back up, down. Now what's it going to do? That is the contraction of the trading range that we're seeing. In terms of momentum, down. So analyzing the chart right now, it's bearish. You have lower highs, lower lows, resistance at 1200.8. You have to take out 1209.80 to negate that, but that would still leave you if you did it with a lower high and a higher low. It is a hard chart to do anything with. It is just as difficult in GLD. My guess is the pros will be sellers on the rallies, as they will in the futures, to the 18-day average of closes, trying to figure out if the market will stay, number one, with the bias down under the 18-day average, the momentum, and the trend down. If you were to take out 1419, it would break that pattern. You'd have a lower low and a higher high, but again, all we'd be stuck in is the Bollinger Bands until you break out one way or the other. And break out one way, it's going to happen. When is the hard thing. In GDX, by the way, it's not a prediction. Nothing goes sideways forever. Remember the VIX for a year and a half? And then it moved out. It's come back into those trading ranges, though. If we take a look at GDX, higher high, lower low, battleground to me, the 18-day average of closes. Momentum is down. The bias is down since you're under the 18-day average, and you're narrowing in the black lines, which are the Bollinger Bands. The market's going sideways again right here. In the gold-silver ratio, at least you're staying under the 18-day moving average of closes, which means silver is a bit stronger than gold. Yes, that's how I'd view that. I'm looking, though, at the chart action as a lower low and a higher high, certainly not a trend. battleground the past 2 sessions has been the 18-day average of closes. The market, if it closed like this, I didn't look to see the exact settlement today, it would have an upside bias, but it's right on that 18-day average, and momentum's still pointing down. Again, a chart that hasn't displayed anything to do just yet. In the copper market, copper's acting pretty darn good. With hearing all the problems China's having, the market is still alive. It's fighting 3 days in a row at the 18-day average. It managed to close over it. It is trendless, as are so many of the metals, with a lower high and a higher low, and I'll call it pretty neutral momentum. When we come to the platinum, this is in an uptrend. Can it hold it? Higher lows. You've had the higher high. For the first time in a day or so, you're back over the 18-day average. You break this pattern and turn bearish if you take out 812.40. Until that's taken out, the resistance is the combination here, and they're the same numbers. The 100-day average in the upper Bollinger Band. And in the Palladium market, as I said, I thought this market was going to go make a run for the 18-day average of closes. It did not. It's reestablished an uptrend, but very overbought. You've got the higher lows, higher highs. If you were to take out 1048.60, then I'd look for the 18-day average as a minimum. You've got divergence here. I hate when I see divergence. In the dollar index, you made another run to the upper Bollinger Band, and you're failing again there. Gee, I'm surprised. The market is what in terms of momentum? Both numbers are over 80 today, but they weren't yesterday. You're not embedded. You're just overbought against a resistance point in an uptrend with upside bias still in this market. We discuss this and a lot more in our Linn research. We not only write on metals, the currencies that go with them, the interest rates. We give you ideas what's going on. What about the energies right now? They're going to be important with Hurricane Michael making its run for Panama City. Are you aware that 40% of the oil rigs in that area are shut down, 320,000 barrels a day, and 28% of the natural gas wells? This is big. It has an impact. Is it lasting or fleeting? Well, we'll find out when the hurricane hits tomorrow as a Category 3, and what does it do? And yes, we discuss it in the weather and the special reports. It all comes out. If you want to see what our customers see, and by the way, we think that's the differential. We know that there's plenty of low commission rates out there. That's okay. Wish you the best with it. But where do you get quality research with a reasonable rate? That is what we're about. So if you'd like to see some quality research on the commodity markets written by commodity people for commodity people, why not take a look and see what our customers get and see if that makes a difference for you? You can get it by calling us, going to our website, or clicking up here. I'm Ira Epstein. You have a good day.